Hi guys, welcome back to my channel, and today I want to do a quick review of the Casper chart. CSPR is the ticker that we have been we have been analyzing it for the past 2 months. So I want to do a quick analysis, less than 5 minutes, so that we see where we have reached and what to expect next. So I'll just go daily to the daily time frame as opposed to me going to the starting from the monthly like I normally do. So this is how Casper played out. This is a trade that we had. If you have been following me, we traded this trade with you, where I had said that the best place to buy is this demand zone. This demand zone. Let me just clear the chart for us to see it properly. So you can see that this is where we bought it. This is where we bought it, where I told you guys that we had done a clean ABC structure up, where we had an A, B, C, D, E. And we clearly said that this could be a wave one, this one. That's why we bought these two retracement, and where I told you exactly where to buy. This is the zone I told you to buy. And you can check in my previous video where I highlighted that clearly. And I told you guys first target was going to be this high. That's why I told you guys to get your capital out. Right? That's what I always tell people. The first target is the most recent high. This one is where you get your capital. Right? Because we remember we had anticipated that this could be a wave one, two, then wave three. But I also told you guys as I was ending the video to be careful, because this could be a wave one, then we get an ABC. Let me just show you quickly. So I told you guys that this was our one. This was our one. And for it to be our clean one, I told you guys that I wanted us to maintain this fair value gap. I didn't want it to be traded into. That's how those are some of the risk management parameters you can have. Right, where if you see this, then you know things are not so good. And that's what you saw. They came, tested it, then they retested this demand here, this supply here, before pushing the price down. So, and that's why I told you when I was ending the last video that I did, that this could be an a B, and a C. When you see a scenario where this gap is filled, you can anticipate this move. And I told you that this C is going to be probably a flat correction, which can take out this A low just slightly, or it can just be a regular flat where it makes a higher low, so that you have a trend line here, so that you can have this trend line here. That's what I told you guys, right? And as you can see, that's why it is always important to get something. If you don't get something from the market can always reverse. That's one thing to know. You see, this is it, so that you can have a high time frame, trend line, wherever it is going to bounce from. But looking at it quickly, you can see that it's not that the bullish narrative has been cancelled. It's just that we have to review the chart again, so that this could be our one, right? Two, and then now we are anticipating for three, right? Then a four and a five. But since this is a five wave structure, which is truncated, where you have your one, two, three, four, five. And truncation is a situation where the five does not take out the three high. So you have a truncation. That is what is called a truncation. So this could be our one, a truncated one, and this is our wave two. So this is the wave 1 for this wave 3 that we are anticipating here. If for the bullish narrative to still hold, right? So this is what you are looking at. But if it is bearish, then you anticipate that this was your 1, and then now we are in A, B, C. And the only way to know whether you are in a bearish market or a bullish market is you want in a bullish market, you want the demand levels to hold, and in a bearish market, you want the supply levels to hold. That's what normally you want to see in these markets, so that you don't get a scenario where you don't know what to look for. So like in this scenario, let me just show you quickly. You can see that this pump that we had, the price still gave you another chance. If you are trading the Elliott wave, you could have seen a 1, a 2, a 3, a 4, and a 5. Why is this a 4? Because you can completely see that there was a triangle here, correction here. So meaning this was our 4, and then a truncated 5 that did not take out this high. So clearly you see this is a 1, 2, 3, 4, and then 5, and then this is now an a B, a complete C again. Where now if you want your bullish narrative to hold, you want these levels to hold now. You want this demand level down here to hold. That's where you want to see price hold for your bullish narrative. Because if these buyers here cannot hold this price the way they are doing here, then it is automatically that they will target these lows. These lows will become our liquidity zones, so that you see a situation where price comes, takes them out, shifts structure, and then you can always buy on this pullback here. Don't try and catch the bottom, because you can never catch the bottom in these markets. So just be patient. When you get this pullback after a clean market structure shift, this is where you enter the trade now. Let me just quickly look at the 4-hour to show you what I am seeing here now. Yeah, it's the same scenario. I just want to see. This is the correction that I was telling you. It's called a triangle. There you can see a complete triangle. We had a triangle here. We had a triangle there. So this was our wave 4. So in this wave 4, automatically you see that price could not make this high. So what happens? Price must come to the demand level, which you can completely see here. This is what I was telling you. That was our demand. It was not tapped, but in some exchanges it was tapped. You see, when price retests this demand, then it needs to have gotten all the fuel it needs to go back up. So when you see a scenario where you see these rejection candles, then as a buyer you stay out of that market, right? Or if you sold some here and you saw these rejection weeks, always get out of the market. Don't wait for the market to take you out where you took the trade from. So that is one thing that I always advise people to do. Don't wait for the market to reverse. You can always buy, but you would rather wait for to buy a bit higher where the market makes a lower low, then shifts, you buy on this retest here to buy, rather than trying to catch this low. Same way when it comes to selling. Selling, you do the same thing. If, for example, your market is bullish, so assuming your market is bullish, let me just quickly draw here. Your market is bullish, right? And then you get a scenario where you see this shift, this latest demand was not able to push price higher, they will always come back to retest this supply here. And that is where you get out. When you see wicks here that cannot fully take out this supply, just get out of that market and wait for the market to retrace until you get a bullish break of structure. Then you re-enter the market with your stop loss here. That's how you do it. And if you are a seller, this is the retest of these supplies is where you sell. The retest of these supplies is where you sell. You don't just sell from anywhere in the middle here. So ideally, that's what I'm looking at. The narrative for Casper is still on, because the bullish structure, like I've showed you, is still there. Because you remember in the last video I posted, when I told you to 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 put this as your invalidation zone, that was your invalidation. When we take out this low, then that will, our bullish scenario for Casper will have been invalidated, and that will probably be a danger zone for this coin, because this will probably mean that the coin is dead now, right? And that's why we want this demand zone here to hold. That's why you want to put your alerts. Just put your alerts there, that high and this low here, or even this demand there, right? So that when price is in the middle here, you go back to your 4 hours time frame, and on your 4 hour time frame, this is where you wait for a complete structure shift. This zone, you wait for that zone that you have marked to be taken out, and then you buy on the demand of that. You wait for that price to take out that zone, and you buy on the retrace. This retracement here is where you buy, because price can continue making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. So your work is to wait for this shift and you buy here. But I'll keep monitoring it, and when I see something interesting, I'll immediately share the chart. I'll continue sharing the chart for Casper, because I think it can still do well, especially if this demand zone here hold, and or it does not break the main low, this one here, that it did make last November. That zone, this is our invalidation zone, because this is our one. This can still be our long drawn out a quick B, then another long drawn out C, right? And for this one, we wait for structure to shift. Also, I can show you quickly the RSI for the 4 hour. You can clearly see that RSI is making higher highs and price is making lower lows, clearly showing you that these market buyers are stepping into the market. That is the 4 hour. Looking at daily, the daily, we are yet to see a divergence, and that's what I will probably wait. You wait for price to make a lower low, and for RSI to make a higher low, with a trend line there, with another trend line going low. That's where you now wait for the structure to shift, and then you can buy, put your stop loss just below here. Always put your stop loss, because the markets can reverse anytime, because of not only technical reasons, but because of also fundamental reasons. These days with Trump, he can just post something and these markets can bleed immediately. One red candle, right? So that's why it is always important to have your stop loss when you enter these markets. And the stop loss is also determined by, are you trading in futures, or are you a spot, right? Yeah, so that's it for today, guys. I want to continue sharing more technical analysis for other coins. So kindly subscribe, and see you again later. Thank you.